February 26th, 2026. Today in the market, this is the NASDAQ right here, looking at the momentum on a daily chart. We had a strong negative response. So we've been building upward momentum. Even though we're building upward momentum, are we going up? No. That tells you that the overall momentum is down. We're in the middle of a bear wave. And we've been building momentum for the past 3 market weeks. And we finally had a crossover yesterday, the 25th. And it was a celebration of a day. The whole market was in joyous celebration. Everything was wonderful. And Nvidia reported great earnings. It was a wonderful day. And then today, we have a huge sell-off. Okay? Not that that's unordinary, not that we should try to be all mystical about it. That's just what happened. So going into today, we expected upward moves as a more than 50% chance. But we always play either side of the move. Doesn't matter. We're not biased. Let's look at the day and go over the trades we took. So first of all, the strategy says we want the 30-minute and the 15-minute and the 5-minute. We want these time frames. Here's the 5 over here. Here's the 15 right here. Here's the 30 right here. We want them to be aligned. And when they are aligned, that's when we take trades. So early in the day, we had a sell-off right at the market open. So here's the market open. Okay, here's the first candle. Huge sell-off. Huge sell-off, first candle of the day. Second candle. This is a 1-minute chart. We have a continuation, and we don't break the previous candle's high. Third candle. Strong sell-off, following through with the negative momentum downward. Our 5-minute twins at this current time are both aligned to the downside. Our 15-minute is aligned. Our 30-minute is aligned. Our 2-hour at this point is basically aligned. So this is a fractal 4. This has a win rate of 90%. Very high win rate. And you can attack it on the 1-minute chart. You can attack it on the 2-minute chart if you want to do the 2-minute. You can attack it many different ways. What we want to see is a volume confluence. And preferably we want to see it on the right side of the MACD momentum. And see how this MACD right here is going up, 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 up. Not going down for the shorts yet. It's going up, up, up. So what we want to see when all of these higher time frames are aligned is we want to see a volume confluence on the right side of the MACD momentum. Had I gone with a 2-minute, the entry would have been right here on this candle. That's the 2-minute entry, and it would have lost because the entry was at the close of the candle, stop loss slightly above, and that price action would have hit it. But luckily enough, I wasn't using a 2-minute chart for this entry, for this 2x3 volume confluence. No, I wasn't. I was using a 1-minute because it's the beginning of the market. And when it's the beginning of the market, it's nice to use a 1-minute. First 30 minutes, first hour of the market, 1 minute's nice, 2-minute chart is nice. I don't know which one to use sometimes, so I kind of alternate between both. As long as you get a volume confluence and you're on the right side of the momentum, as long as you're doing that, you're stacking the probabilities in your favor. Here's where my entry was. Why? Because we have a volume confluence, a 2x3 volume confluence. You're probably noticing this would have gotten stopped out if my stop was too tight, but it wasn't. I put my stop. Here's my entry at the close of this candle, where this yellow line is aligned with. I put my stop above the previous candle. So here's the previous candle. I put my stop above that. So it never hit my stop, and it came down and hit not only the first profit target, but it hit the second profit target as well. So that was a win. And then it came up and hit my stop loss, getting me out of the trade. So now that that trade is concluded, that trade would have gotten stopped out right there. Then I started monitoring on the 2-minute chart because now we're a little bit into the, we're getting further into the market. You can stay with the 1-minute if you'd like. Not a big deal. Absolutely. Chances of you getting stopped out go higher, so you want to widen your stop loss when you use the 1-minute chart. And you'll notice the MACD isn't as clean either. Look at this 1-minute MACD. Not as clean as this. Look at the 2-minute difference. What looks more clean to you? It's pretty obvious, right? So the next time this strategy came into effect was right here. Right here. the MACD finally ticks down, aligning with the overall alignment. We're selling off right now. Building, 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 building. Boom, we tick down. We get a volume confluence. It's as simple as that. That is the entry. Entry right here, stop loss slightly above the entry candle. First target was hit, second target was hit, third target was hit. Almost the last target got hit. That was a huge win. And then as the day unfolded, we're just going to go over this, and then we're going to go over my trades. First, we're going to go over this. We're just going to go through the market together. So this was a huge win. So first trade setup was a win. Second trade signal was also a win. And we move forward. We're still in this win, right? We entered right here, and we're still winning. Still winning. Maybe we hit stop loss here, right? So maybe right around here, our stop loss gets triggered. So at this point, we want to see the 5-minute aligned at the minimum. And we're in the middle of the market, so that's when we use the 5-minute chart anyway. So what do you see right here? Do you see anything interesting? What's this? What's this? We're on the right side of the momentum. The 5-minute momentum is not going up anymore. It has now fallen down. Look what you see right here. A 2x3 volume confluence. 3 volume bars. Last one greater than the first one. 2 minimum are aligned with the trade. 2 red. We're going for shorts. Why? Because the 30-minute is in the... Look at this 30-minute selling off energy. Remember, the 2-hour we're selling off. 15-minute is in the red and hasn't quite broken this critical level yet. The MACD is moving upward, but it hasn't broken this level. It has broken this one. Still in the red. So this is a weaker trade setup, but it is a setup. This is a valid setup because the 5-minute is going with us. That's what we're using right now. We're in the middle of the market. We're using the 5-minute chart. So this right here is the volume confluence. That's the entry. So if we treat that's the candle as the entry, our entry is at the close of the candle, stop loss slightly above. It hit almost every target. It hit the first target, second. It hit second target before coming back and getting stopped out for the remainder. So we're just going over the strategy right now, and then we're going to go over all of my trades. Okay, so we enter here for this setup right here using the 5-minute. That comes down. We get a big win. Wonderful. Maybe we move our stop down here. Now it hits the stop. We're just playing this forward, playing the strategy forward. Now what do you see? Well, the 15-minute has now officially started to cross over at this very current point right here. Started the crossover. The 30-minute has broken a critical variance level. It's now broken and moving up. The 5-minute, what do you see? You see anything interesting? Look what happened right there. That is another volume confluence. Volume confluence, 2x3 volume confluence. We're on the right side. Look, we come up, we're stagnant, and then boom, we get a pop up. Entry at the close of the candle, stop loss slightly below. First target gets hit, that's a win. So this is how the strategy works. As the 15 was making its way up, it hasn't crossed over yet, right? You want it to start crossing over or get very close. Look what happened right here. The 15-minute has now gotten to that middle point. We get a huge volume spike, huge volume confluence, penetrating the 21 EMA. This was another entry right here. Why do we use the 5-minute chart sometimes and use the 2-minute chart some other times? Why do we do that? Because in the middle of the market, middle hours of the market, the volatility regime changes. So you don't want to be using a 1-minute chart in the middle of the market because the volatility is different. So as we get closer to the end of the market, the last 60 minutes, we switch back to a 2-minute. That's what we do. Because the volatility starts to be a little bit different. You can stay with the 2-minute, 1-minute, 3-minute. It doesn't matter what you do. All that matters is that you think about what you're doing. Why are you doing it? There has to be a reason. I lost this trade. I took this trade right here. Why? We had a volume confluence, but I was late. I entered late. This was the entry. Because there is the volume confluence. But I made a mistake. My crucial mistake was impatience and childish yearning for, like, excitement. You'll notice that my entry had no 5-minute support. The 5-minute was tapering away. That is not when you take a long trade. I made a big mistake. So I entered here. Guess what? I picked the top. It never went higher. It never hit the profit target. Entered the close of the candle, stop loss below. That target never got hit. That was a loss. I knew I was taking a trade against the 5 when I did it, so I sized down. But that was a mistake. Just don't take the trade. But what am I doing? Why am I doing that? Next trade was right here. And I entered this trade because we had a volume confluence. But notice, I did it again. This was still late. The entry should have been here. This next one, right here. That's where the entry should have been. Why? Because we have a volume confluence. You always take the first opportunity, not the second opportunity. I missed the official entry, which was this one. So I entered while the next candle was unfolding. I entered late. It's bad. Bad trading. Bad trading. I took 2 bad trades today. First one was a loss. This bad trade was a win because it eventually consolidated, ended up hitting the profit target. We're going to go over my other trades. Took 2 trades in Palantir today. This one right here, I took because we had a pop-up on the MACD. We're taking longs, which we are this time. Why? Because the 15-minute is in the green. 30-minute in the green. Why would we take shorts? That's not how the strategy works. You don't do that. You align with the higher time frames. 2 hours also going up, so that's something to think about. Anyway, we get a pop-up and we get a volume confluence right here. Entry at the close of the candle, stop loss slightly below. And that target was hit. My target was slightly below the original target. I moved my stop loss. I tightened everything. So I entered the trade like this. But then as I was thinking about it, I was thinking about how the 15 was tapering, it wasn't the strongest. I was watching how this momentum was tapering, it wasn't building. So I said, you know, I'm going to tighten everything. I'm going to keep the ratio the same, but I'm going to tighten the window. So I moved my stop up and I moved my profit closer. Ended up hitting the win. That's good. Wonderful. Absolutely wonderful. Next trade was right here. Now we're in the middle of the market, so I'm going to be using a 5-minute chart because we're in the middle of the market. So what does this look like on a 5-minute basis? Well, what do you see? We see a volume confluence on the right side of the momentum. We have our 15-minute in the red. Our 30-minute is now in the red. So I entered the trade right there. That's the entry of the strategy. Entry right here at the close of the candle. Stop loss slightly above. Target was hit. That's a win. It's a 2-to-1 ratio I'm basically using, by the way, with a higher than normal win rate and with the ability to have runners to run and get more profits. So if you have a 2-to-1 ratio, what percentage of wins what win rate do you need to be profitable with a 2-to-1 ratio, if you had to guess? I'll let you figure that out on your own time. Next trade of the day was in INTC. This is my biggest mistake of the day. This was a big loss. Big loss. Look what happened. Look what I did. I performed horribly today because of one reason. Impatience and looking for excitement. At this point where I take this trade, the 30-minute is going up. It's in the red, but it's going up. The 15-minute is in the green, but it's going down. So already this is kind of weird alignment. But the overall energy is we're going down. We're in the red. 30 minutes going down, sort of. 5-minute deep in the red going down. And did I take this trade on a what minute chart? It was on a It was on a 3-minute time frame is when I took this trade. 3 minute or 2 minute, doesn't matter. I wonder what the 2 minute might have looked like. But I entered here. Why? Because we get a volume confluence and our MACD is building. But the reason this was a mistake, this was obviously a loss. You can tell right now. This is the entry right here at the close of the candle. Stop loss slightly above. This never even got close. This was a horrible garbage trade. And it was late. Like, why did I enter here? Think about it. Why? The 30's in the red. That means we're going down. We don't take long trades unless our 15 minute is strong in the green, right? So we should have waited for the 15 to start tapering off right here. Look, now the 15 is tapering off and breaking variance. Right here, it's now had its first break to the downside. It hasn't broken variance yet. It hasn't defeated that level yet. Go forward a little bit more. Now we're really close. We've got 2 consecutive MACD histogram bars on the 15 going down. So this is great. Now we're really looking for an opportunity. Our 5 minute has crossed over to the downside. And then, right here, we finally are now breaking variance on the 15, which is what we want. 5 is in the red. And what do we see? A volume confluence, a 2x3 volume confluence, momentum ticking down. That was the entry right there. That would have resulted in a great win. But I missed it. I wasn't there for it. So then I come and I see it working and I see more expansion, but I'm already late to the original entry, the prime entry, the correct entry, following the rules. And I take the trade here. Why? Because of childishness. And I'm glad I lost. I deserved to lose there. Had I been on a 2 minute chart, by the way, this is hilarious. Look at this. Had I been on a 2 minute chart, I would have entered right here at this tick. Still would have been a loss. That sucks. That sucks. So either way, I deserved the loss. I'm glad I got the loss. I deserved the loss. Because I was trading for excitement. I was trading out of boredom. Had we just used the 5 minute chart, had we just stuck to the 5 minute rules and said we're going to wait for the 15 minute to break variance. 15 minute breaks variance right around here. What do we see? We see a volume confluence right here on the 5. So had I just followed my basic rules, then even these two were late, and the correct entry was right here. Just using the 5 minute chart. So I'm still improving, I'm still learning how I can do things better, and I'm aware of my mistakes. And that's all it takes is awareness, and dedication, and persistence. That was all my trades for the day. I'll see you in the next one. Take care now.